ULTA Beauty is a company that specializes in cosmetics and fragrance, and over the past year they are down by 13%. It is one of the companies that Warren Buffett was loading up on in the past quarters. And so in today's video I want to show you exactly why ULTA Beauty is undervalued and why buying it at its current trading price will yield you great return. And with that, if you do enjoy these spreadsheets and if you find them helpful, you can always download them in the link in the description. Now we have already plugged in ULTA ticker ULTA, and right away we can see that they are not a dividend company. They currently don't pay out any dividends whatsoever. Now jumping straight to the 9 pillars, we can see that the company gets a rating of 7 out of 8, with consecutive revenue growth of 10.51% yearly, consecutive free cash flow growth of 9.40% yearly, and a consecutive net income growth of 81.84% yearly. But if we have a closer look at the net income growth, we can see that the reason why it is so high is because of the 460% change from 2020 to 2021. Otherwise, the net income has been growing at a rate of about 7% yearly. Now moving back to the 9 pillar analysis, we can see that the company also has a very high 5-year profit margin of 42%. They have decreasing shares outstanding, which means that the share value is increasing, and their long-term liabilities over the 5-year free cash flow negative dividends is sitting at only 0.40, which means that they can pay off all their long-term liabilities in about 2 years, which is phenomenal. Now regarding their 5-year PE ratio, that has on average been sitting at 32.82, but if we have a closer look, we can see that that again is because of the high P ratio in 2019, and on average it has been moving in the range below 22.5 where we like it to be, and currently it is sitting at only 15.06. And finally, the price to free cash flow is sitting at only 19.75, which means that investors pay only $19.75 for every dollar of the company's free cash flow. And now let's calculate ULTA Beauty's intrinsic value, first using the Grams formula. And here we plug in the 5-year earnings growth estimate at 7.47% yearly and get an intrinsic value of $321.47, 17% lower than the current trading price of the company. Now moving to the discounted cash flow model, where we predict a calculated growth rate of 7.7% into the future and a discount rate of 8.8% and get an intrinsic value of $483.54. And finally, moving to the multiples valuation, where we compare ULTA to 4 of its competitors, we get an average PE of 20.64, which we multiply by the earnings per share of ULTA and get an intrinsic value of $516.58. And moving to the ultimate valuation, as ULTA doesn't pay out any dividends, we average out the 3 models and get an intrinsic value of $440.53, which is 17.29% higher than the current trading price of the company. And with a margin of safety of 10%, we get an acceptable buy price at $396.48. So yes, buying ULTA Beauty right now at its current trading price would certainly bring you great return. The company is currently quite a lot undervalued, and their 9 pillars are all sitting in the green as we saw. But of course, before adding this company to your portfolio, you still have to do some more research in the backend and figure out whether it even fits into your current portfolio. And with that, I hope you enjoyed the video. Let me know down in the comments which company you'd like me to evaluate next, and leave a like and subscribe as it really helps me out.